me, and I'm very privileged to be on the panel with esteemed my fellow speakers. So thank you for that, and a great question. So I think historically, as a finance function, where we spent time was creating reports, right, and analyzing on what happened and generating the insight on what happened and why did it happen. So you will come when you come at month end, you'll pass all the journal entries, close your books, generate the P&L, understand and do the BVA analysis of the P&L, that why my sales are up, down, my profit up, down, and write your reasons, right? So that is known as providing the insight, and which is a very important role. So we are not saying that generating insight is not important. However, now with the technology, the way we are seeing the world is moving, that people are moving more into foresight. So foresight is, let me give you an analogy. If you are driving a car, you have front screen and where you are looking ahead, and you also have rear view mirror where you look things behind, right? So where you spend more time to look in front or look at back, you more spend more time on looking at front, right? So similarly, foresight is uh, what will happen into my business, what is going to be my forecast of next quarter, how I'm going to be looking at profitability in next quarter, right? So that is more known as predictive, and the next level of maturity is prescriptive. So prescriptive, I describe that you have ambition to grow, let's say 8%, and based on whatever you see in the market, the trend, market growth, the way you have performed in the past, you think that you will be able to grow at 5 to 6%. So what action as CFO you are taking, how you are driving the more precision resource allocation by pulling out the money from somewhere, investing in some new portfolio, which enables you to grow even faster and achieve your ambition at 8%. So that's a prescriptive, and that's all possible with all this new technology with which we are evolving. And I'll take a pause over here, May. Sorry, it's a long answer, but yeah.
Thank you, Keyur. So I think building on that, Vincent, we're very interested in how you feel the rise of technology has helped us to be more proactive and less reactive in the finance function in the global market, particularly China as well.
This is a fantastic question. So we are in a very interesting stage of life where a lot of data are moving into our organization, both in the industry level and also in the global level. So if we look at the ability to manage data, someone once said, data is the new oil, but when you actually want to analyze the data to make it our competitive edge, competitive weapon, competitive tool, it is easier said than done. So in China, for example, many of the organizations I observe are moving quite fast now. So they are moving the payment technology already at a very high speed. I think most of us already know, if you're not having a application in China, you try to pay cash, it's a nightmare. So it's not fun. You can't even have dinner. So it's not fun at all. But if you are talking about the ability of this data, this payment data and consumer behavior data into our organization, and then you try to use it to predict the future, like what Keyur just mentioned, right? Predictive analysis requires lots and lots of data analysis, and therefore you need very strong technology. This is the age that we are able to do this. And when I'm talking about technology, it's not just hardware. Hardware, of course, we have moved to a very, very high level. I'm talking about the commonly available technology from our finance function perspective. For example, BI, right? So when we talk about business intelligence, we have Tableau. Now, currently, a lot of talents are able to use Tableau. We have Power BI. Power BI is almost free, so it's so cheap, it's so easy to use, so available everywhere. And our team members, many of them, if you ask, many of them actually know how to use Power BI. And in SAP, for example, SAP analytic cloud, SAC. SAC is very available. It's a bit more expensive, but it's very available for SAP-based data. So from my perspective, this is the age where technology has upgraded finance function to do even bigger things, more important and interesting things. And the detail of doing that, I think it is about starting and trying to start using data analytics to move our finance function to the next level. So data analytics, like what Keyur just mentioned, is the right first step.
Right.
One thing I'd like to add on to that is
Thanks, Paul.
that Vincent was saying is it's not just the traditional structured data that people are also using, it's also the unstructured data that you can leverage to look at the proactiveness of things. And like unstructured data is things like what are people saying on Twitter and things like that. As people and companies become smarter and smarter, they're incorporating that sort of unstructured data to align and get correlations into their structured internal data to make better and informed decisions. And this is traditionally done at the operational level, but it's also going to become more and more important in the strategic level. So for instance, if you're a retailer and an influencer mentions something on Twitter, you can probably be, and it's one of your products, you're probably going to be sure that's going to sell well. So you can start to use that information, go, look, we need to get more of that item out to the shops. And so that help, and then you don't get the lost sales. So that helps operationally, but all of the really, really smart companies are looking at how they can get this unstructured data and use it for strategic decisions about where to invest in the future, right? So that's going to be another growth that is going to add on to all this data that's sitting around in the place that can be used.
Thank you. That's very interesting. Adeel, just wondering if you have a different point of view from your perspective, from audit or anything else.
It's a very interesting point what Paul raised, and adding on to what Vincent was mentioning as well. I think so. Taking a step back, there are various tools available, which is the RPA we talk about. We talk about artificial intelligence, machine learning, visual capabilities, or cognitive capabilities as well. But one thing that if I take a step back and reflect that accounting profession generally, they have stayed in the test of time. I mean, we have seen the paper move to tablet. We've seen computer move to the cloud, but nothing major change. I mean, the 500 years old double entry system still exists. And we have not been able to, or no one be able to invent anything which can replace it, because it's considered as it's nothing. That is impossible to do that. Yes, finance accountants are supporting the innovations, but we have not seen much changes coming in. Yes, the data analytics will help. All the technologies are helping on that side, but the basic things have not changed. What I wanted to put forward is something on the blockchain, because I think so that's probably another disruptive technology that is coming, and that is already there for the last 4 or 5 years, and that's going to revolutionize even further what we are discussing on the RPAs, or be it the data analytics side as well. Yes, complementing it, but probably it will be more disruptive in my point of view. I was looking into some of the view the smart contract will work in the blockchain. The way it will be that it will be fully digital, the performance will be fully digital underlying, the auditing will be fully digital as well. So technically you don't need many people to perform a lot of those fully controlled and trailed workflows, and potentially a few things that have happened in the past. ERP provide a lot of definitely controls, but at the same time there is always a possibility to bypass those controls, because management can do that. And we have seen Enroll and WorldCom combined, I think so it's like 250 billion euro worth of money that get out of the liquidity at that time. So to me, blockchain is also one of the area that probably we need to keep tab of, the way it's going to evolve and the way it's going to help finance function, as Keyur was mentioning, that traditionally we have been doing quite a lot of spending a lot of time on the number crunching and less time on telling the stories. We do tell the stories, but going forward with using these technologies, potentially I think that there will be even different role that finance will be playing. Financial reporting, I don't see in a few years' time that will be required or CFO will be performing. Yes, that will need to be performed for let's say government regulatory perspective, but I would see as a rest in peace. Same goes for the financial forecasting. So these all things will be done by boards or those technologies will be the one helping us. I was also reading one interesting article from McKinsey where they were saying that all these automations, as Vincent was speaking earlier as well, they are disruptive. But how many percentage of jobs that they see will totally be gone out of the window? It was around 4%. This was last year's survey. However, from job security perspective, probably people should not be much concerned about it. But 60% of the jobs, one way or the other, will be impacted in a way that they will be more efficient. So they will have more time to reflect on other areas as well. And if I look into one of the World Economic Survey, I think that was done in 2018-19, the top 10 sought after jobs, none of them include any of the, probably most of the people sitting on the table. Accountants, auditors, these are one of the most declining globally jobs. So there are, I think, so there is a need not only for us to reflect on that there is a disruptive technology that is coming in, but also for us to upskill and reskill as well. Otherwise, in few years' time, we may not stay relevant. I mean, 20 years back, it was a different story. But now the pace of the change is so high that it's going to be quite challenging to keep up if you don't reskill, upskill. Apologies for very long.
Absolutely. Thank you, Adeel. Indeed, a very interesting area. I believe it's something on everybody's mind as well about the impact on the finance role with the new technology. So we would like to hear from Munish on what his thoughts are, particularly in relation to the healthcare industry.
Yeah, absolutely. Just to first of all add on to what Adeel said in terms of how the technology has disrupted the role of finance. I think it has come a long way, and it has been quite a great journey, for the finance professionals, because we have seen finance becoming more impactful, and what I'm really big fan of is that for finance, what is the most important thing is business first and not the function first, and the technologies actually has enabled us to do that. And I'll come in a bit on the consumer healthcare industry, but with these technological advancements, or the way we have structured our different streams of finance, be it auditing, be it business partnering, or planning, forecasting, closing control, or treasury, it has enabled us to create a very expert zone, wherein people are more efficient, people are able to generate more value for the organization, and with lower number of resources. What it has also enabled us to look at the data with a fresh pair of eyes, and then coming back to Keyur's point in terms of how the data has moved from data to information to insights to foresights. I think finance has played a very important role, and it still has to play a very important role. And I slightly disagree with Adeel that the gone will be the days when the CFO or the finance professionals will not have that kind of a say which they have today, or maybe few years down the line. Because what I've seen is that with the invent of technology, the importance of finance actually has gone up, rather the other way around. Because we have after CEO, I believe it's only the CFOs who has the 360 degree view of the organization. So therefore there is a big canvas for us to kind of play our part. And I completely agree with him on the part that that will require us to upskill our game, and to make sure that we are not just focused on what is our domain. How do we take the business context into the picture and then start performing our role. In terms of consumer healthcare, with COVID, there are a lot of new things which has happened. Obviously, healthcare is actually at an advantage with the COVID-19, with many people moving towards preventive health, and immunity is one of the most googled word in 2020. And and therefore, it is an exciting place to be in. And another dimension to the same is that we have seen people moving towards e-commerce much faster than what it used to be few years down the line. So therefore, again, digital transformation and the companies who had thought about it well in advance and have been on this journey have gained higher versus the ones which were just waiting or were less dependent upon the e-com or the digital transformation journey. So these are broadly some of the things which we have seen. And to sum up my response on this, what the technology has given us, especially in the last 1 year, it has reinforced that to do a finance role with the technology, there are no boundaries. So I have seen a lot of my colleagues handling global roles, sitting from different locations, teams sitting virtually at various other places, and still making a very positive impact for the organization and for the consumers, to whom we have a responsibility to serve in the most efficient manner.
Thank you, Munish. That's a very positive view that you have there. And I like the fact that you talk about the CFO having the 360 view with the CEO, because I think that really needed to help them steer the ship. Pertaining mindset change. This is something that many companies are talking about this as a barrier and as a challenge. Is it something that you've faced personally yourself in your transformation strategy? Perhaps I'll start with asking Vincent.
Certainly, this is a very important question. So many of us have done transformation before, and we all know that some are successful, some are not. But the not so successful one, many of them are due to mindset change. And when we talk about mindset change, right, it's quite general. What do I actually mean? My experience tells me that in this world, there are people who are unwilling to change no matter what you do. And this group of people, they may even like come to tell you that, we are okay to change. I want to change. I'm very forward looking and all. But deep in their mind, there are people who are not willing to change. And my experience is around 20% in my team. So I have about 127 people in my team. About 20% of them are like that. And there's a majority group, silent majority, about 70%. They are like, wait and see. If the project is successful, if the project is good for them, something in it for them, they will be supporting you. Otherwise, they can talk a lot, but eventually they will not. And there's 10% group that's likely to be very inspired, and they will change no matter what. In fact, if you don't change, they will change you. So these three group of people, I always ask my team and my audience when I talk in different conferences before COVID, and I say, which one do you spend a lot of time? And many audiences say it's the 20%, because it's very difficult to change, right? So if you change them, you change everyone. But I always tell them that that's not the choice, because this group of people, sometimes you have to let go, and sometimes you have to let them go. It is a lot of effort to just change them, and eventually you have no more time for doing other things. And another group of audience tell me it is the 70%. It's the group that, wait and see, and this is the majority group. Yeah, if you can change them, you change majority, and therefore you should spend time. Again, I tell them this is not the group, because this group of people will see if you're successful, they follow. But in projects in transformation, they are ups and downs. When you fail or when you are a bit behind, they will leave you. They will go back and say, I told you so, and I told you this will not be successful. And therefore, this is not the group that you focus on. It is the 10% that we always focus on. And therefore, when I look at my team, I determine the mindset of each of my team. It's a difficult task, it's a subjective one, but I determine them and I look at the 10% and I focus on changing the mindset of the 10% towards the right goal, and therefore the rest will follow. And this is a bit controversial. Many people after lunchtime in my previous conference tell me, oh, no, it's 10% is too small. But this is my personal experience. It may be wrong. But this is what I feel.
This is a wonderful discussion. I'd love to hear from Keyur.
Yeah, I think
on J&J.
yeah, I think and also let me tell you my personal belief, right?
Okay.
Your attitude determines altitude in life, right? So
Mm,
each of us are leader in our capacity, and certainly we need to see how we can embrace the change. And we are living into a VUCA world, I always call it. So
mm,
VUCA, I'm sure many of you have heard, which is volatile, uncertain, complex, and ambiguous world, where how we are going to be embracing and adapting to this VUCA and be the change you want to see in the world. And with all this kind of transformation, as a team, we should talk about exciting opportunities ahead versus just talking about what is going to change. Career progression opportunities, the new role which will be coming. How as a person and as a professional you are going to become much stronger, and you will be able to work as Manish was saying with business leader very closely and drive additional growth and create value for your business. So how you drive much more positive outlook for any transformation is key, and making people feel to be part of the journey. So that
right.
would be
So
my
paint the picture for them
yeah.
what the promise would be if the change is executed properly, right?
Yeah.
How about this interesting point about these percentages? Paul, do you have any thoughts from your side?
I 100% agree with Vincent. The whole approach that he's doing, and to be honest, roughly the percentages too. You need to lead those 10% because they're the hardest working people, and they will, if they're directed in the right direction, they will succeed, and then the other 70% will follow. So Vincent, 100% aligned.
Thank you. We have a very interesting, I'm just going to deviate here because I see a very interesting question coming in from the chat. And uh, we've been asked, I believe it's Upendra, if I'm not wrong. He's asking about has any of the esteemed panelists come across an organization closing their books in one day? Because I believe that one of the key outcome of fin transformation will be book closing on the go.
So I can talk about this quickly. We don't do one day in Asurion, we do 2 days, and possibly we could get to one day. However, it's not worth the effort for us because the corporate need they close it in 5 days. So even if for one day it wouldn't have saved that much time. But for background, Asurion's been in APAC for about 7 years, and when we first did it, even the first couple of years was 5 days, and then we just did small incremental changes to get it down, worked out what's not really important, and in some instances we do take shortcuts for during the month.
Mhm.
Obviously at year end, we take a little bit longer to get everything done, but we've got it down to 2 days, and a lot of it was changing, but also a lot of it was working out the processes, and not using technology per se, but making sure the process is very efficient, not just from a finance perspective, but through the whole value chain. And we got significant savings from that. But sorry, we haven't got to the magical 1 day mark yet.
If I can add a
Yeah,
bit
Gaurav.
of add on to Paul was mentioning as well, we have a similar journey actually in the group. We started a bit longer. Instead of 5 days, we used to have 8 working days closing in the beginning, 10 years back. But slowly over the years, we came to 2 days as well. We still think that there is an opportunity to decrease it, but the efforts required and the energy and the investment required probably is not worth it. So we are still sticking with the 2 days. And the year end, as Paul was mentioning, we have 4 days as well, just to ensure that there are no regulatory complications. And for us, most of the information is through ERP as well. But I think so it was not the systems, the technology, it's more of the processes. Once you align them, it helped quite a lot from that side. and eliminating some of the unnecessary things as well, because that was quite a helpful way to see which one actually is critical, which are the things that we can live with and do it later on.
Adeel, you're about to say something?
Sure, sure. I think just to let you know that we also do in typically 5 days time, including everything, and we used to take much longer. And my company is a massive, a very big company, and it publishes the quarterly results to street on in 10 days time, right? So which is a massive, massive achievement, and where and when I'm talking about, it's a company of $90 billion, presence in hundreds of country, and closing the books in 2 weeks time at global level. And at country level, typically it happens in 3 to 4 days time, where we complete all the submissions. And however, there are new technologies, and I'm sure many of you have heard something known as continuous close, and how we are going to leverage the technology, where why we should have only monthly PNLs. Can we have capability to generate a daily PNL, right? So on a daily basis, certain things you can estimate and book the accrual using the technology, and you can have a daily PNL available. And that's where the world is moving into continuous close, availability of PNL on a daily basis, so that you can compare that are you heading in the right direction, and there is no surprise to you at month end or at quarter end when you will be reviewing the results.
Right, thank you. We have another question from Vinit Mera. I think, hi Vinit, I think you just linked in to me, so I recognize your name. He's asking, any uses of blockchain to improve financial closing that could be shared? Adeel, do you want to say?
It's a very interesting question, but there are very few applications at this point of time. Most of them are theoretical, or there are very few companies who have adopted it, and they are still in the testing phase. But in terms of technology, it will be instantaneous. The moment the transaction happens, it will be completed in the blockchain ledger back to back, and the closing theoretically and practically should be done in few hours within the same day. So potentially that is the future. The only challenge would be that once the transactions are locked, it's recorded forever. You cannot change them. You cannot amend them. So there is a bit of downside to that one. Why companies end up having 1 or 2 days of closing is just to ensure that adjust the thing, just to reflect that things are recorded correctly. With the blockchain technology, the idea is that from the very first instance, everything will be correct. So there won't be any complications or adjustments required to reflect it. So yes, it should be instantaneous. I would say not in day, it's less than day, in few hours probably.
So I must not forget Mr. Goh Chai Singh. He asked earlier a question that we were not able to answer due to timing. So I've not forgotten you. What are the skills that needed for finance people given these disruptive times with new technologies? So essentially, perhaps Munish, you would like to share a little on this question, and then
Yeah, sure. I think I'll talk about softer skills first, which are more important in today's time. The first one is, of course, we have been talking about change. I think a finance professional need to be catalyst for change. When it comes to driving things, when things are going well, we should not be too excited about it, and we should find what are the reasons which are driving a good growth. At the same time, if things are not going well, we need to have a courage to question and challenge our colleagues and ask them that what are the things which are lacking and how corrective action can be put in place. So courage, catalyst for change, these are two very, very important skills or the behaviors which are definitely required. The third behavior, I would say, are capabilities, which I would say are very important, and wherein I see, finance colleagues lagging is communication for results. That we have arrived at a good report, we have arrived at a good analysis, but that is not enough. How do we convert that insight or analysis to a tangible solution or action plan or the options for our team members or the business partners is extremely critical. And therefore, having that mindset of not just creating or generating the potential issue areas for us in present or future, it's important for us in today's world to also look at that what can be done to mitigate that, and what are the options which we can give back to our finance partners. The third thing I would say is more from tangible skills perspective is around digital capabilities. I can talk about my industry or maybe Keyur's industry to some extent, wherein the landscape is changing every month. From typically investing into a TV media, now the things are moving towards digital, and within digital also you have Facebook, you have Google, you have YouTube, and then within that there are other channels as well. And then on top of it, you may have expert channels, you have promotions and various other sets of elements playing there. So how do we play a role in terms of assessing the importance of each and every lever of growth? I think that is a very important skill which a finance professional should be able to get along. We are quite good in analyzing SOB, SOMs, which are quite linked to the TV media, ROI investments.
Right.
But when it comes to digital, I think there is a lot of scope for upskilling ourselves on that journey.
And how about Vincent? What do you think the skill set?
Certainly. So I think this is a very good question. It talks about the future of the finance function. Where are we moving towards? So earlier in my presentation, I talked a little bit about the ACCA report. The ACCA report lists out only two skills. The first is the data analysis skill. Data analysis skill may mean Tableau skill, Power BI skill, SAC skill, and the way you can transform the data, visualize the data. There are many, many things inside the report. When you're free, go and take a look. And the second skill is communication skill. And communication skill, everyone talk about this for the past 20 years, so I don't need to delve a bit more to it, but the ability to talk to the board, the ability to talk to thousands of people, the ability to communicate a very complex concept or situation in a very simple term. Those are the main soft skill, of course, on top of what Keyur just mentioned. But there are also a few other tangible things that I recently see. I have been doing a lot of M&A, and recently it's the trend. I don't know why, but recently we have been like buying company and growing faster. So you don't grow by organic anymore, you just buy. But to do that, right, you have to do a lot of valuation. So valuation skill is the next big thing, in my personal opinion, that will propel the finance professional to the next level. Valuation means what? So there are many, many courses and around. Most recently, I think there is a chartered valuer by Institute of Singapore Chartered Accountant, which I was the counsel for a maximum term of 6 years. This guy is the one that governs the national accounting body, audit body, and insurance body. So they have come up with chartered valuer certification, and that shows how important the government think about this area. Valuation is the next high level area, which I think if we look at most of the M&A, the first step towards it, beside connecting with agent and all, is the valuation of assets within the company. And I think that is one of the key skill that we can focus on. And of course, many speakers talk about digitalization skill. I think that's very, very important. Ultimately, there is a merge. There's a merge with IT. How much do we draw the boundary? Where do we draw the boundary? How much do we go into that field? I just joined a company, and I at the same time also in charge of the IT department, and I could see the merging of the capabilities for these two departments, finance and IT. And I think there are a lot of roles for finance professionals to play. But if you look carefully, many of them are merging with IT. And there's also another report which came out last year, and they talk about CFO, right? So in the future, that report predicts no more CFO, no more. And they predicted, this one is not from me, they predicted there's a CFO, CFIO position, Chief Financial Information Officer or something.
Yes.
It is inside the report. I didn't create the report from UK. So that report, I think, totally look at how much we should focus on as finance professional on data skill, For example, just now I talked a little bit about data architecture. That means you build a data warehouse, you use cloud computing to manage data over there. How do you manage this data? So in terms of skill set, lots of them. I point out the 4 items, and I hope it's contributing.
So can I just add on to Vincent's point? And what we did this last year, and I agree with most of his buckets, but what we did to actually make it operationally is we created a skills gap assessment, and we rolled this out throughout the entire finance function. And we sort of mapped what skills we required for, we did it for the business to be a business partner, what skills are required to be a business partner, mapped those out. And then we mapped each individual people about where they are to get an idea about where they are and to give them an idea about themselves, where they are ranked, but also what people can we bring on the journey to be really trusted business partners. And it took a long time working with HR to come up with the buckets to put into them, but it was really, really productive because there's 2 things. We got benefit out as the company could see who could be the business partners of the future, but also a lot of people really understood, okay, this is where I am. This is a bit that I want to upskill on. And to Vincent's earlier point, the 20% of people that realize that don't go there, they realized that they don't want to go on this journey. So they leave themselves. And it was just a very nice way to put everything together. So my practical tip for you guys is to create these skills gap assessment.
Right. Thank you, Paul. Back to a point that Vincent mentioned, the trend on buying companies, right? Despite being in the pandemic, there was a question asked about whether there's a tool to work out the valuation, because everybody's using different approaches. Vincent, can you comment on that?
Certainly. Hey, before I do that, just now, Paul, I totally agree with you on the skills roadmap. And we did the same thing for WSQ. Together with WSQ, I was one of the council members. And I think this was what the government has been asking. And I think your company is one of the one at the forefront. And the government is publishing, I think in the next 2 months, a list of skills to reach a certain level. For example, if it's CFO, what are the skills that you need to reach and what are the steps to reach there? If you're wanting to be an audit director, CAE or chief audit executive, what is the skill set? And then FP&A director. So I think your company is at the forefront, but the government is also coming out with something very similar. So Meanwhile, you're absolutely right. I think in terms of valuation, right, a lot of people are doing that in the pandemic. Why? Of course, because it's very cheap. At the same time, it's also because of the Cold War, and we have to change our structure. We have to buy companies, buy capabilities to do slightly different things, disrupt ourselves in order to move forward. But to buy companies, not just buying M&A, so it could be some joint ventures, it could be some investment. In doing that, right, I personally do not find a system that I can use. And very, very unfortunately, I have been looking at different systems. Professor Aswath mentioned this in the valuation summit, like I think 4 weeks ago. That was one of the largest summit in the region on valuation. And he came up with very, very structural model to value a company, and very interesting modeling. However, that model is not in a system. It's not in the system. And the reason why it's not in the system is because there are a lot of components, like a lot of moving parts at the same time. Every single company is with a hell lot of different elements. And if we compare one against two, one against the number two, the first one against number two, you will have a lot of problem matching. And once you finish the evaluation, the data are all rubbish. And therefore, Professor Oswath in that conference talked about not having a one-size-fits-all. So at this point of time, I am looking at many systems. Like, for example, the ERP system, I'm using the different MES system to feed data, and therefore I can come up with a data structure to value the different assets and therefore the different companies. But I do not have one single source of system to do that.
Just to add on what Vincent is saying as well, I was part of the team for merger and acquisition in the past, and I've been auditing recently in the last few years as well, the global teams. And it's very rightly that, first of all, it's not treated as that every company is going for a merger and acquisition on a regular basis, or having a specific skill set in-house usually is not something that is sought after. And secondly, there is not a big investment made by the technology companies outside to develop such models. It's very difficult to find one fit all. You need to always customize. So we always have some problem to address it. So it's always kind of not starting from the scratch, but still there is no one solution that we have been able to find to adopt on that side.
Right, great. We have 5 minutes, and I thought it would be interesting to hear from Keyur and Kaushal about their companies being the global giants, expanding geographically, and how do you actually manage to drive your change cross-functionally with your IT team and align the rest of the organization? Do you think you could share something with us on this topic?
Certainly. Munish, you want to start and I can chime in?
No, you go ahead, Keyur, no problem. Yeah.
Okay. So thanks. I think as we know that what is going to not change is change, right? And with all this digital transformation, in order to remain relevant, we call our company as a 130-year-old company, and we are 130-year-old company, and we want to remain relevant for 130 next year. So if we don't change the way we have done the business, will not remain relevant. And we do a very strong collaboration and partnership with different teams like IT. You mentioned in terms of driving and bringing the different technology, as we spoke about multiple times during this presentation, that AI is at inflection point today. We are seeing a data explosion which is happening. The data volume and velocity has increased manifold. There are a lot of new technologies, cloud computing, improvement in algorithms, open source tools are coming. Machine learning is coming. So with that, we bring all this kind of information in partnership with our business partners in different departments, and we, in a cohesive way, build on AI strategy for the entire company. And within that, the finance will have a very important component, that where we want to head within the function in terms of overall AI strategy, and it has to be cohesive. We have to keep in designing any strategy, the customer in center of everything, and how we are going to drive additional business value and growth from implementing that. So that would be my couple of sentences on this.
Thank you.
Yeah. So in addition to it, I just want to add that quite similar to what Keyur said, and the approach has always been that, first of all, to be very transparent with our colleagues, whether in tech or other functions, and telling them what's the change coming, how does it impact them, and then linking it back with the big picture and the overall goal which we want to achieve. Because in my experience, there are many simplifications which we drive. It could be it may not be simplifying the things for a one particular function or one particular person, but what we need to make them realize is that how does it helps the overall organization, and what is the big goal which we are trying to achieve. So therefore, getting them on board and telling them, whether this pain, which is going to be there for them is going to be temporary or permanent. And then, after this, how the future looks like, how it's going to solve a lot of other issues for the organization or for them. I think that kind of collaboration and that kind of transparency in communication really helps to drive the change agenda forward. Viren.
Oh, thank you very much. With that, I would like to thank our amazing panel, Munish, Paul, Keyur, Vincent, Adeel. It's been a pleasure having you. Thank you so much for sharing all your work very openly with everyone. And we've enjoyed having you. Thank you very much.
Thank
Thank
you.
you.
Thank you so much.
Thanks,